Hello, afternoon. Welcome to the latest episode of Blokes with Beards Talking Business, the just fucking pay me edit. Um, what might go down as possibly the biggest shit show in history, but hopefully we'll fill your ears with a few useful nuggets. As you can see, we are Alanless at the moment. He's just come back from swanning off in Portugal, and I think he said he'd had some ructions with the hire car company, so maybe he's not used to the dimensions of a Seat Leon, and he's dinged it when he's given it back. Who knows? But but we've got me this morning or this afternoon, and we've got Mark, our business lawyer, and we are going to cover ways to make sure that you're getting paid. Alan's going to pop on when he can. God knows when that'll be. But for now, you make do with us. If you've got any questions, pop them in the side. We'll get answering them. Questions are absolutely welcome. If we haven't got a clue, which there's a chance, when Alan comes, we'll store them up for him. But we've got plenty of things that we can go through from our end as well. So, Mark, do you want to kick off with the usual disclaimer?
Yeah, give me a second.
I think we're narrow today because Alan's logged in from his phone. Although I guess
it does look a bit narrow. I'm not quite sure what's going on here.
I don't know what anyone watching can see, whether it looks like it's a phone size or whether that's just us. But anyway.
Yes, hopefully people can see us. I mean, to be honest with you, the smaller I am, the smaller my head is on the screen, probably better. No one wants to be staring at that. Right, yeah, so here's a disclaimer. Everyone just have a quick read over that.
I can't see it, Mark.
Oh, dear. It says that it's sharing my screen. Oh, do you know what it might be? I think possibly because Alan is in charge of the the stream. I think he has to authorize sharing, possibly.
Fair enough.
So basically, go on, Chris. Do you want to do your summary then? That's probably the.
I'll give you the quick one. So, look, everything that we are talking about today is guidance. It's not advice. Obviously, it's not tailored to anyone's individual circumstances. We will answer questions you've got to help you figure out the answer yourself, but don't go doing anything off the back of what we're saying without getting advice, because that would be mental, and we can't accept any responsibility for you doing something stupid. I think that's it, isn't it?
That's it. That's nailed it. I don't think we need to display it anymore. I think we just rely on your verbal disclaimer.
Sound. So, right. Where do we go with this one then? So we haven't got any questions that have dropped in the stream just yet. If you want to give us a little wave, please do, because we're really needy. We haven't got any pre-submits this week, so I guess we'll let's just crack straight into it then, Mark. So, I mean, first off, let's go into the more legal side of things that you can do to try and help make sure that you're getting paid from a contractual side of things before we get Alan in with the more mechanical side of things. What would the first big hot talking point be for you in terms of making sure that you get this set up right?
Yeah, good question. I mean, before we crack on, by the way, I hope you appreciate my new and improved abode for our sessions. I've worked out that there was other buttons I could press for my virtual background rather than the coal shed wall. So I've got a blue chair, but behind it you can see sort of there's a swimming pool. It's a nice little pad. I'm enjoying it actually quite a lot. So
well done. Doesn't look shit at all. It's fine.
Yes, I mean, I've got big checklists for this kind of stuff because I work with clients on it all the time, and genuinely people are asking probably at least once a week, how do I make sure I'm getting paid on time? Because it's a massive thing, particularly for smaller businesses. They just don't have the same swing that the bigger businesses do. And, and a lot of the time it's sort of sign up to our terms, the 60 days or the 90 days, there's nothing you can do, and we'll pay you whenever we're ready. And so I see a lot of smaller businesses just getting, and solo businesses just getting absolutely hammered by this a lot. So there are things you can do legally, and as we've said, from an accounting sort of management perspective. But I think what might be helpful is if I just give you a few of the better things that we can look at first, and then we can sort of go through maybe some of the contractual points that people might include as well.
Yeah, I think that's a good idea.
So I think probably the first thing you're going to want to do. I mean, I did a post on this actually recently on LinkedIn, which people seem to enjoy. So I'll crib some of it from that because it seemed to resonate with quite a few people. But the first thing that anyone should be doing really before you get into a new client is investigating them a little bit, trying to vet them properly. So there's a lot of things you can do to try and see if they're someone who's going to pay you on time, if they've got a bad credit history, if they are in the news for doing something awful. That's always something to watch out for. And so that's kind of your first port of call. So for instance, there's companies that will do checks on clients for you. For instance, Dun & Bradstreet, D&B, they'll do a D&B check. You can get companies like Experian to do credit checks, possibly against directors if you're looking at limited company as well. You can go on to the County Court Register of Judgments, and you can see if that company has had a money judgment against them, and perhaps for not paying what they should have done. And then you can also see how quickly they paid it as well, and whether it's been satisfied.
Is that because I'd imagine Experian and D&B, they're going to want a subscription or charge you a few quid to do that each time you want to do it? But going and looking at CCJs and things, is that just a public resource, is it?
It is, but I still think you have to pay. It's not a great deal. I think I can't remember the exact figure, but it's really not much. So if you've got a big client job and you're just a little bit nervous about it, it's probably worth the investment.
Yeah.
So, I presume everyone knows what a CCJ is, but just to hammer it home, basically, if I was to sue you, Chris, say you owed me £1,000, and I take you to court, and the court, and for some reason you dispute it, and you say I don't agree, I'm taking you all the way to a hearing. We get to a hearing, and the court says no, Mark's right, Chris, you owe him £1,000. Then you'll get. And if it's in the county court, you'll get a judgment, which is a court order, and it's called a county court judgment or a CCJ. And then you will have a certain amount of time to pay that. And if you pay it all to me within 1 month, then you can basically wipe that CCJ off as if it never existed. So that won't appear on the register, and that'll be, that won't affect your credit score. If you don't pay me within a month, and you faff around and try and dispute it and then eventually settle it, then you can apply for it to say that you've satisfied it, but because it was after a month, it will stay on the record for a while. And obviously, if you don't pay it at all, then I could take other steps to enforce it. And so all these things will appear on the record. And if someone investigating you, if they wanted to work with you, would say, well, this doesn't look good. This guy didn't pay the money that he was supposed to. Then he took this other. Then he allowed it all to go to court, and then he still didn't pay it. So it doesn't look good, and it'd be a big red flag if someone else probably looking to work with you.
Okay, that's just for direct clients. You don't have the same sort of functionality. Say, if a business has been a crap payer in the past, do you?
Yeah. I mean, so I could sue you as Chris Thompson, but if you were running a limited company, Chris Thompson Limited, I could sue you as well. It would just depend on which entity was the one that owed me the money.
Okay, that's a good way. Okay, I mean, I guess logically, but before all of the contract terms, before all of everything, the most logical way to make sure that you're getting paid on time, and I would imagine this is where Alan, the free agent zealot, would come in, would be make sure you're invoicing as quickly as you can. The quicker that you get that out to people, the better. And you've got things like zero or free agent. I think I meant to say free agent lots of times. Is that part of the terms and conditions?
They'll be sending commission. Don't worry, it's all good.
Yeah, exactly. But you can, I think you can even do them in like on the mobile app. You can fire them straight out. So I mean, that's got to be the number one way of making sure that you get what you want.
Oh, absolutely. I mean, this is a really obvious one, and it sometimes irritates people that I say it. But people will say, "How do I get paid on time?" And I say, "Get paid up front before you do anything." And everyone goes, "Oh, yeah, I know, but I can't do that." Or the clients resist, and sometimes, you may have to suck it up because some industries just don't do upfront payment. It is so ingrained in that industry that it's credit terms of 30 days or sometimes 60 days that you won't be able to get the job that you want if your terms say you have to pay me up front. But for me, I get paid up front for all my work. I've had one client who objected to it. I think he'd been burnt before, in fact, by two previous law firms, and who charged him a lot of money to do not very much because we had to look into it. That's beside the point. But he'd been burnt a little bit. So I said, look, you've never used me before. Give me 50% up front. And when I've done the job, give me the other 50%, and I'm sure you'll be happy. And he said, fine. And it worked, 50%. And then at the end, he gave me 50%. And the next job we did, he paid me 100% up front because the trust was already there. So there is a bit of a trust element that you've got to convince people that if they're going to pay you up front, then you're going to do a good job.
Yeah, that's true. I mean,
a pushback from that, but that is absolutely the way that you're going to get your cash flow coming in, is get the money up front, do the job.
Yeah, or at least, whatever. If you've got a certain amount of expenses involved with the job, at least cover your expenses so you know you're not going to be out of pocket if you do have to have a battle on your hands getting that money.
Absolutely, yeah, and if there's an initial investment that you need to make to get things off the ground, then get that covered, or or try and get as big of a deposit or advance payment as you can up front. Even if you have to, like we said before, I did a 50-50. Even if you have to do half and then half at the end, that's better than doing all of it at the end, right?
Yeah, true. Sometimes you've got to be ballsy enough to take that stance, though, don't you? Because it's easier said than done sometimes.
Well, if you're struggling, you can always ask a lawyer to help you get some good terms.
Nice. And I guess accuracy is going to be another big one as well, because if you're not taking that time to make sure you're invoicing right the first time round, and it's a few days, someone sat on your invoice, that they're then going to come back to you, well, this isn't right, can you redo it? You're just dragging out the time it's going to take to get that paid.
Absolutely, yeah. And accuracy extends all the way from getting your agreement in principle with your client through to getting that committed to a written contract or some terms, and all the way through to then following through with what you're actually billing and invoicing them. That whole system has to tie together, and you have to be on the ball with it all. If you're sending invoices that are wrong, if you're not clear in your scope of work or your contract, what the actual price is, and there's a mismatch, then that's going to be a massive roadblock to you getting paid on time, 100%.
So when you're sitting down with a client, and Mark, and drawing up sort of terms of engagement, terms of business, that sort of stuff, and you're having discussions about this very subject, what are the sort of considerations that tend to be gone through and included in those agreements?
Good question. You've just wound me up you've pulled the string there, like on Woody, and I'm just gonna go now. So,
all right, if I start doing this, then we've hit 60 minutes.
Yeah. Everyone's gone. Everyone's asleep. Just shut me up. But there's lots of things we talk about. So the first thing is obviously making sure that, as I've just said, the price is clearly laid out in the contract. Make it as easy as possible. If VAT's charged on top of it, say VAT is charged on top of it. Otherwise, you're then into this murky ground of, oh, well, is VAT inclusive? And typically there'll be an assumption that probably VAT is included, right? There's various legal rules around that, but yeah, if you don't mention VAT, then there's certainly a good argument that's included. So you might have just done yourself out of that if you've not included it and been clear on it. We look at payment terms. So going back to what we just said, if you aren't getting paid up front, then be absolutely crystal clear on when you're going to get paid. So when will payment be made? What's the trigger for payment to be made? Be absolutely clear on that. Is it, when are you entitled to submit your invoice? If you've got a big project, do you want to stage it so that you can submit an invoice at certain milestones? And then once the client's got the invoice, how long do they have to pay it? It goes without saying that the shorter that period is, the better it is for you, for your cash flow. So, a lot of these bigger, clients will be trying to get you to agree to, 30 or 60-day terms, obviously 90-day terms. And that's just going to put a massive brake on your cash flow. So if you've got the ability to negotiate, try and get it down to as much as possible. If you get 7 days, 14 days, that's pretty good. As long as you know that this client is going to pay on time and you've vetted them. We've already talked about that. So then obviously you can set out how payments can be made to make it even easier in your contract. You can say all payments are made to this bank account and here are my BACS details. Again, just making it really easy for the client to be able to make payment when it's due. I
guess you probably want to give people as many different options. If they've got if they want to pay by card, if they want to do a bank transfer, you want to take away the barriers to actually getting the money out of their account and into yours as well, don't you?
100%. And if you're really clear on what payments you will accept, what payments you won't, and how they can go about it, then there's no ambiguity at all. And speak to the client about this. It's all well and good including all this in your terms written down, but and as a lawyer, I shouldn't say this, but nobody fucking reads the terms, right? everyone just signs them and sends them back and says, let's crack on. So, if there's a way to make that clear to them, highlight it, maybe put a separate document to say, just the key points, I will be submitting an invoice on this date and you have to pay it by then. Are you okay with that? And just communicate, make sure they're absolutely 100% on what you're doing. For overseas, it depends what type of work you're doing, but be precise about the currency. I've had this one before. That's an absolute pain. And then, you have issues over the exchange rate and when the date it was due. And it's just not worth getting into that battle. In terms of, let me just go back to I've got a little list that I'll work through.
So how do you negate that then? You just say, look, I want it paid in this amount in sterling. That has to land in my bank account.
Yeah, absolutely. So that you're going to get that amount of sterling. It's if you then paid it, if you said that it's say euros and the amount of euros changes, the exchange rate between euros and sterling changes, then you might be getting less. Yeah. So it's just about being clear on that. Then be absolutely crystal clear on the scope of work. I mean, this is a big one. I see loads of disputes around non-payment because just mismatched client expectations. If you're not clear on the scope of work and then you submit a bill and the client comes back and says, I'm not paying this because I thought you were supposed to do X, Y, Z and all you've done is X. I don't get it. I'm not paying it. So be absolutely clear in your contract, set out what you will be doing for that money and what you won't be doing and when you're going to do it by. And then there's much less chance of your client coming back and saying that you haven't delivered the service that you promised and therefore they're not going to pay you.
Got it. Good afternoon, Pavel. Good to see you.
Oh, have we got Pavel here?
We've got Pavel Phillips in as well.
Hi guys.
Look at this, flooding in.
Oh, we've got a question. Phil,
Come on,
you're my saviour. My monologue was going on a little bit too long there.
Go on in, I'll read this one out from from Philip. So how about when a client stops paying or misses a payment from an ongoing service, such as website hosting and maintenance? It's a good one.
Brilliant question. Absolutely brilliant. And it's in my list, this. So there is, people think that if you're delivering a service and someone doesn't pay you, then you can just stop delivering the service. So someone has to step in. Yes, thanks. You my saviour today. So yeah, that's a really good question, because people think they've got a right to just stop supplying the service, but you don't automatically. The good thing is that you are allowed in your contract to include a term that if you're not paid on time, that you will suspend the services, you'll stop providing them. And you can get a contractual, a process that will say, look, if you don't pay us by this time, we will give you notice. And if you don't pay by the end of the notice period, we are going to stop providing your services. And that's that. And that's a really effective way to get people to pay on time. Because if you think that, for instance, if it's what did you say, website hosting and maintenance, if the website hosting, if the website is really important to these guys, then they're going to want it to be live all the time. And if they think that if they miss a payment, then the website's going down, that could be a huge impact on the business. So that's a really good clause to include if you're delivering ongoing services.
So what, by default then, let's say you haven't included that in your contract, someone's not paid, and you haven't got that term that says if you don't pay, we'll take it away.
Yeah.
Then what are you, how long are you stuck on the hook delivering that without them paying for then?
Depending on what your contract says, potentially till the end. Potentially. Yeah. So you can include other things in your contract to say that if the client breaches the contract, then you will have a right to end it, for instance. Yeah. So, but you've got to include that.
You've got to define that as a breach, I guess, as well, don't you?
But absolutely right. And typically, if you've got clear payment terms, then as soon as they go over the date for payment, that's a breach of contract, right? In principle, there might be other things going on, but so what you need to say is, okay, after that point, here's the notice period. We will stop after that point, and then if you don't pay by this point, we will terminate the contract completely. So, because the suspension of services is different from a termination. A suspension is putting pause on it until you pay us. A termination is saying we're done.
Yeah.
And then we're still entitled to pursue all the money you haven't paid us.
Okay.
Does that make sense?
Well, it does. Hopefully it makes sense to Phil.
Yeah, well, yes, exactly. Like an e-commerce that's generating income, you don't want to stop. Yeah, exactly. You absolutely, if it's an e-commerce business, you absolutely don't want that website to go down. And yeah, it will certainly have a massive impact on revenue and, reputation and all of those things. So that's a really good clause to include. And I advise my clients to include it when they can. So if you're not delivering a service and you are supplying goods, okay, cheers, Phil. And you're not supplying the service, but you're supplying goods, then there's a different clause you can include, because with goods, it's if it's a one-off set of goods, you can't say we'll suspend our service, because that doesn't apply. You can include something called a retention of title clause, and it kind of does what it says on the tin. So even though you've transferred the goods to your client, unless and until they pay you for those goods, you keep legal title in them. So legal title doesn't transfer. And what you can do, depending on how well you draft your clause, is roll up at the premises, go and get your goods back, take them all back, and say, thank you, you didn't pay, we'll have them back and we'll resell them. So that's a good one to include for agreements supplying goods. But it's a bit of a messy area, because particularly if they then sort of commingle those goods into other goods, or it's, you're supplying part of a mixture and then they put it into the mixture, it can be a real pain to start untangling those kind of situations. But in principle, it is a good one to include as well.
Yeah. And when you say you can just go around and get it, I'm assuming that doesn't mean you're just kicking the door in and taking back, the TV you posted. That's going to involve like bailiffs coming in and going through all of that sort of expense as well to get it back.
Correct. Yeah. You can't just roll up in Tony Soprano style with a baseball bat and break the door down and grab all the stuff. Yeah. You owe me money. Where are my goods, man? Yeah, you can't do any of that. Did you like that impression? I thought I'd try and throw that in for you.
It was an impression. Yeah, very good. I think to channel my inner Alan as well, because you talked about payment terms and negotiating your payment terms.
Yeah.
There's I'm not a particularly philosophical chap, but there is an element of karma in there as well. People are going to use those payment terms. There'll be times when your cash flow's tight and you need to use those terms right to the limit. Obviously, you don't want to go over the agreed terms, but you might well need to take them right to the limit. But if you've got spare cash, if you've got enough cash in there to just get things paid, just get them paid. I think the whole don't be a dick, Alan's ethos. If you can pay someone quickly, get it done, and you're putting that good out into the universe so that you've got a bit of credit in the bank when you need some leeway at the other end as well.
Yeah, absolutely. I think that's a really good point. Is if you're practicing what you preach, then it's got to work for your suppliers as well, because there's a chain here. And you need to make sure you're doing the right thing that way, so that the clients are going to do the right thing for you that way.
So when let's say we're in a position then where someone is taking the piss, and you've got 30-day terms, and you're getting to sort of day 40, you've sent a couple of polite reminders, you're starting to get a bit antsy because you need that cash coming in.
Yeah.
Like, what's next without? Because it's a dance to dance, isn't it? You don't necessarily want to tarnish that relationship because they might be a good ongoing customer, but you want to get paid.
You want your money, yeah. Well, I mean, this is a matter for each business really, and their appetite for disputes and whatnot. But let's say you've got a good contract and it's got all the right clauses. Let's say there's no ambiguity around the payment's due. They've not said we're offsetting payment because you've not delivered something or anything like that, or it's not clear that's not the terms we agreed. Let's just assume you've got a decent contract, it's signed, you've got all the terms I've just talked about. Then in principle you can sue them for the amount that's unpaid. So it's an interesting one. It depends how much you've got unpaid, and it depends again, what else your contract says. So just to give some context, so that what I'm saying makes more sense. If it's under 10k, you'd have to go in the small claims court, and that is, many people refer to that as the kangaroo court, because it's kind of anything goes wild west. There's not many procedures to follow. You provide your evidence in a big fat bundle 2 weeks before the hearing. No one gets to see it before then. It's chaos. And the bad thing about going to the small claims track as a claimant is that you will not get your legal costs back, generally, even if you win. So
your legal costs, am I right? It's a bit more rigid in the small. Is that right? There's a sort of fee structure. It's not like open-ended. You're paying your lawyer loads, and if you lose, you've got to pay their lawyer loads.
So in the small claims track, the default position is that whoever wins kind of bears their own costs. Both parties bear their own legal costs. By bear, I mean that they have to pay them. Whereas in courts above 10k, it's all changed recently. It used to be called the fast track, the multi-track. It's changed now, but looking above 10k, you generally, if you win, get to recover your legal costs from the losing party. So that's why it depends on how much is owed, because that will decide your strategy. And so say for instance you had a £5,000 debt outstanding, and you had lawyers to take it all the way to a hearing. That may easily cost you £5,000, and then you're in a you're in a net neutral position and it wasn't worth doing anything other than perhaps as a point of principle.
Yeah. So you're owed a few £100. Your decision then becomes more: do I really want this person as a client? Do we just can this relationship on the head?
Yeah, exactly. And that's then looking at the long-term commercial viability of keeping that client around. And you can, in your contract, going back to the contract terms, include a clause that says you will pay us our legal costs if we have to pursue you for debts, and you've not paid on time. And that's a good clause to include, again, because going back to the under 10K small claims track situation, basically the case law has said that if you've got a very clear provision in your contract that says you can get legal costs, that can to some extent override what the small claims track rules say, because it's a contract that you've agreed between yourselves. So in that case, you might actually be able to get your legal costs back, which is why including a clause like that can be really, really useful as well.
Yeah. Okay.
Sorry, Chris, go on.
I was just going to say, I've had a lovely little, let's call it a love note from Alan. Basically, he's stuck in, I'll not stick with his expletive, but he's stuck in traffic. So we were hoping he might treat us with a little appearance about half hour in, but I don't think we're going to have Alan this week. So if anyone watching wants to send him some abuse for Mark Maclean-esque timekeeping, then that'll be all too welcome. I think you're in the clear now for probably all of time, because I think your record's 2 minutes late, and Alan's got a whole show.
That's impressive. I mean, even for my standards, that's absolutely impressive. So well done, Alan. Bravo. The other thing I'd mention, I mean, what we can do is Alan actually sent me. Alan sent me a link to one of his blogs, which contains some good tips. So we can actually go through some of those. Obviously, I'm not going to put on Alan's voice, but we could read some of those in a second. But just one final point to mention: if someone isn't paying, you can issue something called a statutory demand. And basically, if they owe you a certain amount, if they owe you above that threshold, you can issue this statutory demand. And if they don't pay or respond to it, you can basically bankrupt them. This is what I'd call a nuclear option. So be careful doing it, but it can be a good tactic it's a good weapon in your arsenal in terms of convincing someone to hand over the cash on time.
Yeah. If there is, and I might murder the terminology of this, because this was definitely more of an Alan area of specialism, but if you've got a client who is having difficulties, shall we say, just with a few, the relationships there, you don't want to sour it, they're good for it, but their cash flow maybe just means that they're a little bit slower than you'd like them to be. Am I right in thinking you've got, is it called factoring, where you can get finance on, using that invoice as a security, so that you can basically get a loan. It's like a payday loan, effectively, isn't it? Here's a bit of cash to give you cash flow, pay it back to us when you get the invoice paid.
Yeah, there's different setups you can go through, and again, it is probably more Alan's remit, but in theory, yeah, you can get invoice factoring schemes. Some of them will pay you a proportion of that invoice, quite a big proportion sometimes, and then obviously they will then get the rest from the client. But you've got to look at the terms carefully, because some of them, well, if they can't get it off the client, they're just going to come after you for it anyway. So it's a bit, they can be a bit tricky. So if you're going to enter into one of those schemes, make sure you look over the terms carefully. But if you're in a tight spot, it can help, because you help your cash flow. You're getting that cash quickly, and then it's just a matter of making sure that the client does pay eventually.
Yeah, I imagine the difference between good value and not in those. Some of those are going to be like Wonga-esque, whereas you'll get some that you aren't quite paying through the nose. And I would imagine someone like Alan's got experience of who are the piss takers and who are sort of more reasonable places to go to for that sort of thing if you need it.
Yeah, absolutely. Accountants are normally good people to kind of look at those schemes and say which one might be suitable for you based on where you are, how tight cash is, what your cash flow predictions are, all those kind of things. So yeah, I've got, if you want, I mean, we've got about 7 or 8 minutes. I've just got Acumenica's top 10 cash management tips, which I think is probably, we can maybe just list a few of those off. That might be helpful if you're happy for me to crack on. So point 1 is prepare a robust and honest short-term cash flow forecast. So basically, that's just saying to be honest with yourself about what you expect to receive, and then you'll be able to know very quickly whether the business can operate within those available cash resources. That also means you can start making decisions on how long your payment terms are and whether to when you need to push clients and not. Invoice accurately and quickly. We've touched on this before. I think that's a massive one. Invoice accurately and quickly means the clients are going to hopefully pay quicker, and it makes it very easy for them to not have any objections. Be easy to pay. Another great tip. This is what we're saying about in your contract terms. If you set up here's how you can pay us, but then go a step further, get your systems to reflect that. So is it easy for clients to maybe click a link or something on an email, and they can just and they can just pay over the internet really quickly with a few buttons, or can you set up some sort of recurring payment where they just approve it each month or something like that? So technology is your friend here, to be honest, I think, and making it really easy to pay for your clients. And Alan's mentioned, merchant service. There's other apps such as Stripe, iZettle, and PayPal. So again, useful technology there. Don't forget the tax man. Yeah, we can never forget the tax man. That's a very good tip there. I think that's just really about managing your cash flow and not, spending the money that the tax man's going to need and be following you around for.
I guess there's another tick in the box for having decent software like your free agents of the world or wherever, where they'll tell you on a running basis, this is what you owe, so put that to one side rather than getting nasty surprises.
Absolutely right. Yeah, 100%. And then a few others, which I'll just flag up here. Minimize fixed cost expenses. Use your supplier payment terms to your advantage. Great point. Yeah, that's, as we were talking about, managing it this way with your client, but also manage it that way with your suppliers, and try and tie them up. So, if your client terms are, they're only paying every 60 days, but your suppliers are wanting to be paid every 7 days, you might get into trouble. So trying to marry those up would be a really good move. Consider invoice or trade finance. We've just touched on that point as well. And invest in stock management. Communicate with all stakeholders. That's a really good one, of course, if you're struggling. Keep everyone looped in. And finally, align yourself with people who are like-minded. That's a really great tip.
Yeah, what I'll do actually, I will put a link to Alan's blog post in the comments section.
Yeah,
so I can figure out how to do that, because it is quite a good read. And whilst, well, look, we're at 42. I think it's probably safe to say, Mark, that we were worried it was going to be an absolute shit show, but actually, I think we've probably both had a bit more on this topic than we realised we did. And imagine what we would have covered if we had his Lord and Master himself with us.
I know, we would have been unstoppable.
Well, I think unless there's any final questions, I think it's probably a good point to wrap it up now, other than to say thank you very much to everybody who's tuned in. Philip, Pavel, thanks for popping some bits in the comments. I think next week it is technically election day, so it'll be fun to see what happens there. But we've got a guest lined up who is going to be a leading voice on inheritance tax. So we're looking at sort of succession, estate planning, things to think about if the worst happens and you're not here anymore. So get tuned in for that one. But no, it's been good. I think well done, Mark. You've carried the torch well this week.
Thanks, Chris. We've managed it, didn't we? And I think just to go on the back of that. There is a huge amount of things you can do to to keep cash flow coming and make sure you get paid on time. I think we may even be able to do another session on this, to be honest with you, because there is so much to cover. But if in the meantime, if you have any queries, just drop us a line, and any questions we have, we can sort of store them all up, and then if we get enough, I do think it might be useful to do another one on this with Alan involved too.
Yeah, I think so. Now, I've just realised that I did start a little lead in that was going to build up to, right, thank you very much for tuning in, see you later. But I've also realised that we're a little bit focused because Alan's not here, and he's got the master controls. So we are live until Alan actually turns us off.
If you want, but I think if we leave, it will probably just go blank, and then maybe it will continue to be live for the next 4 to 6 hours, but hopefully not. Hopefully it'll just cut off. But
yeah, let's leave. It's not our problem then. It's the world's problem.
Yeah.
All right. Thanks, everyone. Cheers.
Cheers, guys. Bye-bye.